Hello guys, welcome back to another new YouTube video. So in this episode I'm going to be talking about the most undervalued aspect in forex trading, which is the forex trading psychology. So I'm going to be giving you 7 tips that helped me to improve my trading psychology to become a profitable trader. So guys, stick around, make sure to subscribe, and let's get started with this video. So the first psychology tip is to take it slow. Guys, we want to take this thing slow because when you move very fast, you tend to mess up very much. When you're trying to make like 100% of your money in just a day, you're going to blow up your account because you'll be going in full margin. So by taking it slow, I mean, guys, I want you to come into this thing with that mindset that okay, I want to get rich, but not getting rich very fast. I want you to come into this with the mindset that is, things don't just work out in just 2 days, 3 days. Things take time. So when you look at all the richest guys in the, you look at Elon Musk, you look at Jeff Bezos, all these people, they've been working for quite a long time for them to be where they are right now. Things took time. So with forex, when you make the process very fast, you're going to mess up indiscipline, you're going to trade with emotions and all that, guys. So the first thing to help you with the forex psychology is to first take it slow. When okay, I'm moving slow, but again, all I want to do is to move slow, but on the right path. There is no purpose to move very fast, and you're on the wrong path. You get? So guys, moving very fast, it brings up these negative effects of trading, because you are coming in with an emotion to trade very fast. Most of you guys, when you come into this forex market, you come in with a happiness. You come in with so much energy. You think this is like the easiest way to make money in the forex market. Forex is the hardest way to make money in the market. It's actually the hardest way to make money. But again, as long as we learn what forex means, take it slow. This is like a step by step. We make money in forex market by accumulating our income, not just coming in and making 100% of your money. I'll give you an example like the hedge funds. Hedge funds, it's a $1 billion company. They have billions and billions of dollars, but their goal is to make 20% of their income per year. Okay, so guys, that's tip number 1. Tip number 2, developing good trading habits. So by this I mean creating something like takes time. So this is something like you have to repeat every day and day. So when you're trading in the forex market, something that has to help us with our forex psychology is to have like good habits. But these good habits come day by day. You can't just wake up and then you have this. You have to develop it. So we need to develop like good trading habits. So we have to be in the markets every day. We need to practice proper risk management. But practicing proper risk management is not going to just happen like this. Most people have traded for more than 5 years to develop their habits, whatever they are trading, like their way of trading. So like me, I haven't been in the markets for a long time. This is like my 3rd year trading the forex markets. You get? So the mistakes that I've done, I haven't done the same mistakes. I just learned from my mistakes and then moved on again. So but all in that, we just want to develop good trading habits that these are the days I'm trading. So if every week you're trading on only those days, that's like a habit. But again, it can't just come once. This is something that we have to develop every day. So guys, I just want you to develop good trading habits, and this will be good for your trading psychology. Tip number 3, control your emotions. Control your emotions. This is one of the thing that messes up people in the forex market. You can analyze the markets, but when it comes to placing trades, this is where most of people mess up. Guys, emotions, there's even this saying, when you make a decision off your emotions, that will always be wrong. So one way to control your emotions, guys, is first practice on your demo account before coming onto this. First practice your risk management on your demo account before coming to the real account. Most of you guys just jump quick to the real account and you practice your emotions and everything from there. Guys, if you're an emotional person, you can't do forex. If you're someone who has emotions and all that, you can't do forex. First, don't ever let your emotions drive in when you're analyzing the markets. One of the easiest ways to control emotions is first learn Forex. Learn all the basics. Like literally, when you know everything on your fingertips, which it takes time, but you know everything, like you won't let your emotions drive you, because the biggest thing in the Forex market is just even risk management. That's like the biggest thing, risk management. If you have your risk management in your hands like this, you're a ruthless person. You'll be a ruthless person. Nothing will get to your heart, guys. Nothing can get to your heart. No emotions. And I'm going to come to that on how we can control more of our emotions just using risk management. But guys, let's control our emotions. Emotions drive in. You see a candle going up, you want to take it in. You know when you lose money, how do you behave? You want to revenge trade. Those are all emotions, guys. Even this applies to real life. When like let's say if you get money. When you get money, you feel like you want to buy anything, you can even just go out giving people money, but after you realize when that is all done, you realize now emotions have gone away. You realize, okay, I did this and this was not right, So it's always bad to act on something just based off emotions, guys. It's always bad. So control your emotions. Emotions, that's like the biggest thing, and I'm going to do a separate video for emotions in my upcoming videos, guys. Tip number 4, guys, stay disciplined. Stay disciplined in whatever you do. So when it comes to Forex, when you're trading in the Forex market, we need to have like the highest degree of discipline. I used to be an indisciplined person when it comes to life and all that. I didn't like really care about stuff. Like I was so indisciplined, but when I came into the Forex market, like discipline had to come in. Discipline, the way you're trading, the way you're risking, the way you look at risk to reward, the way you analyze your charts. You don't trade every day. When you lose money, you don't stay into the market, you don't revenge trade. That's all discipline, guys. That's all discipline. How do you behave? This is all, it helps with Forex psychology. You need to be disciplined, guys. That's something very key that also you have to develop as you go on. Forex is even more of the experience. That's why, like when you go to jobs, some jobs they ask you, how do you have like this number of years of experience? Because experiences, it matters so much. You can't just come into Forex and then boom, you succeed. Even this experience matters, because through this experience you'll have seen like multiple things, multiple patterns that happen every day, multiple candlesticks. Now when it comes to me, I know all the candlesticks on my fingertips. I know all the Forex patterns on my fingertips. I know like the different ways market moves. Like everything is just on my fingertips. But I didn't just know this. I didn't just understand these things like overnight. They took me time. Remember I started trading Forex just like 3 years back, So this has really helped me to keep discipline. I know when I go to the market, I know what I'm looking for. That's all discipline, guys. Tip number 5 to help you with your trading psychology is keeping a trading journal. We need to have somewhere we note our trading, like where you note everything like you have done. Let's say you have hit profits and there's a certain structure has given you profits. You need to note it down so that when it ever happens again in the market, okay, this happened and this, okay. You need to note down like the days even when you lose money, okay, this is the mistake I did. I don't want to do this mistake again. So you note down all that. Even like most of your winning days, you have to note all these things down. That's why like we need to journal our trades and all that. We need to have a journal where we write all our everything to do with Forex. Even though it's not a journal, as long as you can write somewhere and then I think it's just more of keeping records. You're keeping records of your trading journey. So I've been keeping record of my trading journey since I started Forex. Because first of all, when I was learning Forex, I had to note down all of everything. So again, when I'm making profits, I know, okay, this is the pattern that gives me, let's say double top, a double bottom. I know this is the pattern. Every time it comes into the market, I know I'm going to go in big time. So keeping record of your journal, of your trades is a very, very good thing. Number 6 is take advantage of the demo account. So the demo account is a very good platform, provided by the brokers. So they just offer you virtual money to trade, but remember you're trading in the real markets. So you trading in the demo account and me, I'm on the real market, but trading with real money. The only difference is the money. You are using virtual money and I'm using real money, but the markets are all the same. So they give you this platform. To see to have a feel of the market, to see how does the market move, Yeah, but again, on the demo account is where we need to practice our risk management. If let's say if your risk to reward is 1 to 2 or 1 to 3, right? You're risking 1% and your reward is 3%. So meaning you're going to first practice that on your demo account. Okay, let's say if I'm risking 1% and let's say my account is like $10,000, I'm going to be risking 1% of the $10,000, but to make 3%. I first practice that on the demo account before bringing it on the real account, and I have to treat the demo account as my own, you know, because you can't practice these things onto the real account. Most of you guys have this problem where you want to just straight up jump to the real account and then practice most of those things from there. These things affect you guys. One of the things that helped me is taking advantage of the demo account, and I always treated the demo account as my own account. That's one thing that helped me to trade very well. I knew it was a demo account, but again, I knew this was my way out. I had to treat it as a real account. You get, even for those guys that want to join the funded accounts, still remember that you're first given demo accounts, you know. But again, you treat it as your real account. So guys, take advantage of the demo account. Don't just see them somewhere where you can just go place big trades and then when you go to losses you close and then open more trades. No guys, take advantage of the demo account. So this is my last point, tip number 7. Learn from your mistakes, learn from your losses. So by this I mean more of the cases when we make losses, we need to learn from our mistakes, guys. Because if I took a trade and I was like early into that trade, it means okay, this is the mistake I did. So sometimes I note it down in my book so that I know, okay, this is what I did last time, I'm not going to do it again. So most of you guys, like the mistakes that you keep on doing, you just like, you don't even learn from them, you keep on doing them. And one of the biggest mistakes is not having a trading plan, not having risk management, you know, which is a very bad thing. Most of you guys have this thing where your target is to make like very small profits, and you know you don't have a stop loss. So when markets go into big losses, you have hope that markets will recover, which most of the cases blows up your account. And then when you go to profits, it messes up everything, because when you go in profits, you just close small profits with the hope that with the fear that market will reverse to the side and you lose your money, guys. So let's learn from our mistakes. If you have been having some mistakes you've been doing for a long time, let's say if you drink alcohol and you know drinking alcohol like gets you into trouble, like why do you keep on doing it? You just have to learn from your mistake, you know. So like me too, I had like some bad stuff like I used to go through when I was in high school and university, but I learned from those things because I knew if I kept on doing the same things, my life right now would be messed up. My life right now would be so messed up. But I learned that these things will affect my life, and I can't just keep on doing the same things. So this is even how like I got to be disciplined in the Forex market, and you know, guys, that was my last point. Make sure to subscribe, and I hope your trading psychology gets better, guys. Remember, risk management is everything. Risk management is everything, guys. I'll see you in my next video. Bye bye.